My name is Ed Roman, and I'm a managing partner at Hack VC, which is an early stage venture capital firm focused on Web3 and crypto fintech.
How did you conceive the idea of this firm?
So, Hack VC's origins go back a number of years, well back to about 2018. And back then, we were more of a generalist venture capital firm. So, we invested in things like fintech and SaaS and open source and software infrastructure. And we also did some crypto as well. And then the crypto wave started to really hit um, in that time frame, and we saw crypto as a transformational opportunity, especially as it relates to crypto fintech and decentralized finance. Decentralized finance is kind of like a once in a generation new financial system that crypto has created. And so we decided to focus on investing in crypto and DeFi, as well as more recently crypto AI. And so that's kind of our focus today as a venture firm, is that we are a Web3/crypto focused venture capital firm.
What's crypto AI? I can't say I've heard much about that.
So crypto AI is like a really interesting intersection of two technologies. So right now, what we've all heard about with AI exists in the Web 2 world. That's where kind of OpenAI operates, and Anthropic and NVIDIA, etc. What the crypto rails kind of give the AI world is this idea of using underutilized GPUs from around the world. So if you can imagine, there's a bunch of gamers around the world that have desktop machines with graphics cards that are not used during the day. There's servers, Amazon Web Services, and Google Cloud that have extra GPU cycles, and they're not used 24/7, 52 weeks a year. So imagine if we could tap into those underutilized compute cycles and bring new economics to AI. And so the crypto set of rails, there's a whole parallel AI system being built on top of that in the crypto world of all these layers. They all reside on top of this idea of a decentralized network for AI.
Fascinating stuff. I'm sure we'll hear more about that going forward. So going back to talk about your fund specifically then, what can you share in terms of the number of checks maybe you've written the last year? How do you think about segmenting your strategy, your focus?
Of course. So HackVC last year was the second most active crypto venture capital firm in the world. So we're a highly active venture firm. We're considered a lead investor, and we're also considered a co-lead investor because we like to have other funds join us in those rounds. So we're a conviction-based investor that's thesis-driven. So, we basically believe in the future of Web3 technologies and crypto. We think these are once-in-a-generation opportunities. And so for us, we're investing because we believe this is the innovation that will carry us forward as an industry. And so that's kind of a little bit about us. We generally are leading seed rounds, pre-seed rounds, as well as Series A rounds in crypto.
And is there any kind of highlights you can share with success stories to date, or exits maybe, or profiles that you've backed, or anything else that you think is worth highlighting?
Of course, yeah. So we're very proud to have backed some of the best kind of infrastructure crypto protocols in the last few years. At least our view of them, we believe are some of the strongest in the industry. So one example of that is called Movement. Movement is a protocol that allows for higher security and safety in crypto. Their protocol launched, their token valuation is in the kind of like the $8 to $10 billion range at this point. So we're very proud of Movement. Another one is Bearchain. Bearchain is a fintech focused kind of decentralized finance protocol for doing crypto operations on the blockchain, and it's a fundamental infrastructure protocol that has novel token incentives. They're worth several $billion, I think around $3.5 billion if I last checked. Another one is called Babylon. Babylon allows you to take Bitcoin and earn additional yield with your Bitcoin while also providing additional security to networks. And Babylon has also billions of dollars of Bitcoin that are staked within their system. So these are all kind of like multi-billion-dollar protocols that have either launched their tokens or they are likely to launch their tokens pretty soon. And so we're very proud to have backed them at VC, as well as a number of others that you can see on our website.
So given that your incredible level of activity in terms of writing checks, how do you do it? How many deals do you look at every year, and how do you kind of even solicit this sort of deal flow? What's your strategy or process around that?
So what's interesting about investing in crypto and crypto fintech, which is what we focus on at Hack VC, is that the early stage crypto market is not a huge industry compared to, for example, AI and Web 2, which most every other VC is fighting over the kind of the same deals in traditional AI and Web 2. So we're kind of in a fortunate position in that we actually get to see most of the interesting deals that are fundraising in the crypto space at the early stages at this point, because our reputation and our brand has grown to be strong enough now where founders are kind of coming to us. So most of our deal flow now comes through referrals, through angels, founders we've backed in the past, our brand, sometimes over Twitter, but also from other funds. They're just to be frank, there aren't that many active crypto funds that have capital to deploy compared to traditional venture capital. So when you have a smaller industry like that, you have the nice property of being able to see a lot of the best opportunities, and then it's all about how do you win those deals, and we have a strong strategy for that as well.
So kind of related to that, then I guess, how do you filter down? Because I presume there's a lot more people asking for money than you actually end up investing in. So how do you decide who to back and not? I mean, a lot of the technologies that you might be looking at, by the sounds of it, are kind of fledgling and kind of alternative, and they're kind of almost they need you to have a lot of conviction to your to earlier point. Like how do you filter? How do you get to a conviction around something or a startup or a team?
That's a great question. So, one of the nice things about crypto and Web3 is that you might remember FTX, that whole catastrophe happened a couple years ago. And that event kind of weeded out a lot of the founders that were what I would call like quote unquote tourists, like founders that are just there to make a quick buck. Obviously, there still are founders like that in the industry, but a lot of those founders have kind of moved on to new territory. So what we were left with after the wake of FTX is a much healthier industry where a lot of the founders who were left over were very mission driven. They were doing it because they really cared about advancing the technology. So our job actually got a lot easier after FTX because the signal to noise ratio improved for venture firms. So the way that we kind of sift through and filter the wheat from the chaff is we have a very technical team at Hack VC. So our team consists of protocol founders and key employees at protocols who have built these technologies in the past, and they have the aptitude to assess these protocols in a way that a traditional venture capitalist wouldn't have the ability to do, because this is like a very niche and specific technology that you need to have expertise to evaluate. So we also have a very strong set of founders that we've met from the past who also assist us in due diligence as needed. And so the early stage crypto world is kind of a small, tightly knit group of people who trust each other. And if the referrals are coming from people we trust, we prioritize those referrals much more seriously. And so for us, we're not in a rush to invest. We can take our time and be thoughtful on due diligence. Again, because the industry has slowed down a little bit after FTX, it's given us more time to be thoughtful in our process.
So you kind of alluded to it there, I suppose, but what is the best way for an entrepreneur founder to get in touch with you? Is it to go through their networks to get to you, or how do you normally prefer for people to find you? Can they email you or LinkedIn you? Or
Yeah, I'm happy to take referrals. So my email address is ed@vc. You can also find us on Telegram. Telegram is the channel that most crypto firms use to communicate, and I'm just Edward Roman on Telegram. So I'm happy to have conversations with crypto founders that are in this industry and building for the future.
wow, that's a high degree of accessibility there, which is sort of rare these days. But you obviously must have seen a ton of pitches then, good, bad, and the ugly. To help the founders out there, can you share any sort of top tips to kind of cut through the noise? What would you need to see for a pitch to stand out?
Of course. So there's three categories that we generally prioritize investing in. So with founders building one of these three categories, that kind of makes that a lot more of a priority for us to have conversations with. And obviously, we're open-minded to new categories as well. So we're not limiting ourselves to these. But the categories that we're particularly excited about right now, one is decentralized finance and crypto fintech, which is basically, how often does a new financial system arrive in this world, right? Not very often, right? The last time that happened was when the stock market was created in the 1920s, right? So here we are 100 years later, and we have another financial system being proposed, which is decentralized finance. We think that's very exciting. Will empower a lot of new applications, including things like stablecoin payments, international remittances, things like that. But also new ways to earn yield. So, taking assets that are in the real world and tokenizing them, putting them on chain, making them tradable, that kind of stuff. So we think that's an incredible opportunity. We also like crypto AI because, as I mentioned earlier, that's bringing new economics to artificial intelligence through more efficient use of GPUs around the world. And the last category we like is infrastructure. This is kind of like the picks and shovels of building in crypto. So this would be like a layer one protocol or a cross-chain bridge, that kind of stuff. So this is all the stuff that I'm mentioning here, by the way, is pretty boring stuff. Like this is all very dry stuff, right? It's infrastructure for crypto, right? It's kind of B2B in its nature. But we think that actually is kind of where a lot of the alpha is in crypto. And we think that's kind of building the basis for the next generation of applications in crypto. So if you're a founder and you're in these categories, we generally will prioritize you a little bit more highly. Some of the things that we think that we've been less excited about recently have been things like founders that are just taking advantage of the latest buzzwords who are not as mission driven. So that's kind of like you've got the good, the bad, and the ugly. That would be like the bad, right? It's just kind of being opportunistic founders. They're not really there to solve a problem, rather just there to make a quick buck. Crypto has always had actors like this. We tried to screen them out. And the ugly, I would say, is kind of like what happened. You might have seen in the news in the last week or so in Argentina, this Libra meme coin that got launched, right? It's been all over the news recently. And that's been a catastrophe, and it's really undercut a lot of the credibility of that Argentinian official. And so we think you have to be very careful about kind of rug pulls, sniping, that kind of stuff, right? When it comes to crypto, we're trying to invest in more in fundamental infrastructure rather than gimmicks like that. So that'll be an example of the ugly, maybe some things to avoid.
Okay. So, and looking ahead then, the future, as you mentioned, maybe there's been some peaks and troughs in terms of the interest around crypto or Web3, the general sentiment. What do you think the next 10 years hold for this space? Why are you excited? Why do you think this is a great time to invest in this space or be a founder and active in this space?
Well, we think crypto right now, especially crypto fintech, is poised to do quite well because there's a lot of tailwinds in the market that are kind of driving that. So you might remember when Trump was elected recently as president in the U.S. He had the support of the crypto industry as they contributed towards his fundraising campaign significantly. And Trump himself is a fan of crypto at this point. He spoke at the Bitcoin conference. He has his own DeFi protocol, what is it called? World Liberty City Financial, right? And so when have we ever had a president with his own crypto protocol? That's never happened. He also has his own meme coin, Trump meme coin. The SEC chair, who was in opposition to crypto largely, Gary Gensler, stepped down, and we have a new SEC chair now. We also have regulations that are expected to improve stablecoin regulations across the world. So if you think about stablecoins, the opportunity for stablecoins, stablecoins are a tokenized representation of a fiat asset like a dollar, for example, like USDC, USDT are examples of this, right? If you can imagine paying consumers and other businesses internationally using stablecoins, it's a whole lot cheaper and a whole lot faster than a wire transfer. Wire transfers are slow and expensive. And that's significant savings that would make business a lot faster and cheaper to conduct around the world. So we think this is the number one highest product market fit that crypto has right now. It's a huge tailwind. We've got David Sachs right now in the White House as the crypto czar, right, in the White House. And David Sachs is pushing forward a positive pro-crypto agenda that also keeps people safe around the world and kind of gives us regulatory clarity. It gives founders clarity so that they don't have to worry about kind of going to jail, that kind of stuff, as long as they're obeying the rules. So you put all these things together, it's a positive kind of tailwind for the industry. So we think that, obviously there's always a risk of a black swan happening in crypto, right? Crypto's always had these kind of unpredictable events like FTX, right? But we believe these are kind of like growing pains for the industry to evolve and to grow up. And so the fundamentals of crypto and the efficiencies you get out of them are what's exciting to us over the next 10 years.
Ed, that's really interesting insights. Really appreciate that. Thank you again for your time and look forward to following you guys and your future investments.
Thank you very much.